I'm going to start out with the economic outlook. It's kind of interesting. We've started out the year with some pretty negative forward-looking thoughts relative to, are we going to go into a recession? How bad is it going to be? But at the end of the day, things are starting to pan out looking much nicer. And what we're finding there is a much greater confidence in the looking forward relative to the economy and how 2024 is going to shape up for us. You've got two charts here. On the right-hand side, you've got the outlook scenarios, and you can see that the normal recession is kind of off the table at this point. It really looks like we're more likely to have a normal recession, but the good part, maybe even the better part, Rocky, is the soft landing or slow growth is growing as the potential. Then on the left side, you've got the recession probability. Looking at that chart, you've got Blue Chip Consensus Forecast, Bloomberg, and City National Rockdale. You blend it all together, what do you got? Well, you got estimates, that's what you have. But all in all, what you do have is the fact that things are looking better. So the key changes from a recession standpoint is there is a reduction in the normal. Mild recession base case has actually gotten better. One of the reasons, well, the Fed tightening and the constraints on consumers plus business lending has tightened things up a little bit, slowed things down. The consumer, the consumer has actually been one of the anchors in this whole probability game here relative to how we're going to turn out. And the fact is the consumers, they've got a relatively strong household balance sheet and real income. In other words, their income is holding better. They're getting the raises, the income's coming in. Why is that? Because there are labor shortages. And because of the labor shortages, it's keeping the unemployment at a minimum. Now, the feds may not like that, but their game is to get unemployment up to slow things down, and the average consumer would just as soon stay employed. And it's favoring the consumer at this point. Now, when you look at the mild recession ahead and you start looking at the numbers, this actually bodes very well, especially from a stock market standpoint, and I'll talk a little bit about that later. But this chart shows City National Rockdale's forecast. So in the blue are the key points, and then on the right side, you've got 2022, the numbers that actually came in. You got 2023 estimates and 2024 estimates. So looking at the real annual GDP growth, well, that's going to be waning over the next year and a half. The 2024 estimates are anywhere between 0.5% and 0.75. Corporate profits, on the other hand, are the positive note here. 2022, they were at a little over 5%. 2023, that's been a little bit tougher, -2 to 1%. But in 2024, their estimates are actually showing a pretty positive year, which bodes well for the stock market. Then you look at the Fed funds rate. The Fed funds rate, even though it looks high right now, it will be starting to wane in 2024. Again, that bodes well for corporate profits. And then the Treasury notes, well, we've been following them. Short term tends to be better, but it looks like it's going to hold relatively the same for 2024. So interest rates are coming down. We look at 2025 in the future, and hopefully we'll get them down to something where everybody feels a little bit more tolerable.